Hey guys, Ben here, back with another video. Today I'm showing you my investment portfolio. Personally, I don't have much money in it. It's a very beginner portfolio, so it should help you. Visualize and start your own portfolio, right? If I can do it, you can do it. So I'm gonna try to make some concepts come to light, make them more apparent than they seem in my previous videos, right? So I'm going to show you the Holy Grail strategy in action with my portfolio. I'm going to show you what it kind of looks like when you're starting. Okay, so unless you live under a rock, here's another note. You know that the stock market is not doing well right now, and unless you live under a rock, you know that there's a pandemic going on right now, and that has influenced the stock market. Also, what is common knowledge in the investment world is that the stock market and the economic activity going on is hugely disconnected right now, and they're calling for a huge crash. And I truly believe that's going to happen. Most experts believe that's going to happen. So hold on to your money right now and deploy it into the market when everything drops, when it all goes on sale, so to speak. Okay? So let me jump right into it, right? My holdings. A holding is each individual ETF, index fund, or stock that you own. And your portfolio is your collection of holdings, okay? I just want to clarify. So, I spoke about this in depth before. These are my ETFs and index that I own. ZEB is the Canadian Financials Index Fund, the collection of the largest Canadian banks, and some insurance companies are in there. ZUT is Canadian Utilities Company, so it has the top Canadian utilities that go global, go to the States, etc. XRE is major Canadian real estate, mostly in Toronto, but it's all over Canada. In each province, they have real estate all over. Okay, so I really like that one. It pays a nice dividend. All these pay a nice dividend. Well, that's not true. These XRE pays a nice dividend. I've been holding it for a long time. ZUT pays a decent dividend. ZEB pays a very good dividend because Canadian banks pay good dividends. Okay. I recently got into this index because I believe that it has a lot of potential, just like the legal marijuana had great potential. So PSYK is the first Canadian psychedelics index fund, or exchange traded fund. Okay. It's basically run by a company called MindMed, and they're trying to get psilocybin mushrooms and therapeutic doses of LSD and stuff to war veterans, stuff like that, okay? So I'm a big believer that could blow up, and it's kind of a speculation because it pays no dividend, but I'm willing to put a 5% stake in my portfolio on that bet, okay? I've weighed the pros and cons, and I've decided that I'm going to follow through with holding that for a while and see what happens. Okay, ARK, ARKK is my largest investment. It's run by one of the greatest mutual fund managers right now, called Kathy Wood. This is the only technical mutual fund that I own. So the reason I own ARK is its largest holding in its index, which is around 11 to 12% right now, is Tesla. So if I were to buy Tesla, the company, the individual stock Tesla, it would be around $700 to purchase right now. If I buy ARK, which has a very heavily weighted position on Tesla, it's only about $130 right now. And these are discount prices. Everything's been dropping. Keep that in mind. So, okay, I also have ZCH, one of my other ETFs. This is my second biggest holding in my portfolio. This is all the major China stocks. So I've spoke about the S&P 500, which is the 500 largest 500 largest US stocks. Okay, ZCH is a collection of the largest companies in China, individual stocks in China. So its greatest holding is Alibaba, which I own by itself as well, but I'll get to that. So it has about a 10% heavily weighted position in Alibaba, which is the e-commerce mega giant in China and all around the world, right? It's the Amazon of Asia, okay? EAAI, which is a Canadian fund that hedges basically ARK. It copies ARK's organization of their funds, and it hedges them to Canadian. So it makes it a lot easier to hold, but it has a higher management expense ratio. I'm willing to do that. This also, EAAI, also has a very heavy position in Tesla. It also has heavy positions in Netflix, Amazon, all the top ones. So instead of me owning the S&P 500, I'd rather own the one that's much more innovative in healthcare and diseases, 3D printing. That's what these do right here, okay? So those are the ETFs and index funds that I own right now. I don't have many holdings, as you can see. It's only, my current balance is about $6,225, okay? It's not very much. But I'm working on it, and I want you to see my progress and my journey as I grow my wealth and I actually become something, okay? So my individual stocks, FLT. FLT is Canadian Drone Delivery Service in Canada. And from my understanding, they're one of the largest and most innovative in the world for drones. Their logistics are ahead of everybody. Like they've gotten clearances to get their drones like going in the sky and actually performing regular duties. They have that farther than Amazon. They have it farther than everybody, from my understanding, all around the world. And they're getting contracts in Africa. They're getting contracts everywhere. Their company's starting to finally grow traction. I have 185 shares in here. It's only $1.98 to buy right now. Okay, that's a good one. But here's the catch: it doesn't pay any dividends. However, just like the psychedelic one, and just like this one that pay no dividends, I am more than willing to take the bet, because I've weighed the pros and cons. I've checked their balance sheet. I've checked all the due diligence that I had to do. And I'm more than willing to hold FLT because I believe the drone delivery is going to be absolutely massive 5 to 10 years from now. Like huge, okay? And that's common knowledge in the investment space. Okay, let me get into this right here, okay? So as you can see, I put 8 uncorrelations total. So if you remember, when I was explaining the Holy Grail strategy, you need, I'd say, minimum 10 to 15 to 20 kind of max of uncorrelated sectors. So as you can see, altogether, I only have 8 uncorrelated sectors. So I have a greater possibility of losing money right now relative to my reward. So my risk-reward ratio is in the middle, okay? I'm getting there. If I got another 4 or 5 uncorrelated stocks to add to my portfolio, it would balance my trajectory of my portfolio a lot better, okay? So here's what I like to explain. As you can see, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, but I only put 8 uncorrelations. So Alibaba is the most heavily weighted position in ZCH. So they're very correlated. I decided to buy Alibaba because I believe in this company so much that I wanted to not just own it through the index, I wanted to own it straight up. I only have 2 shares because they're about $250 a share. So it's $500 just so I can have 2 shares of Alibaba, okay? Once again, with the TD Bank, so when I went to see a guy at TD Bank to set up my TD Direct Investing accounts for investments, he made it very clear to me that the TD, Toronto Dominion Bank of Canada, owns about 70% of the market in Canada, which is huge. They pay an amazing dividend, but they're about $70 to $80. It goes up and down, right? Per share for the TD stock. So TD is one of the most highly weighted positions in ZEB, the Canadian Bank Index Fund. Okay, so that means they are correlated. So I can't add these two as more uncorrelations because they're so correlated to these. So therefore, I only have 8 uncorrelations total. Okay, I hope this helped you. I tried to break it down everything's coming together now, including my other videos. We're going to get more into it. We're going to dig deep. Thank you for watching. Subscribe. I will see you next time, guys.